Hello everyone and welcome to this session on dollar INR. It is the last weekend ahead of Diwali and we have already seen a lot of fireworks happening in dollar INR. So let's get going. This is the dollar INR chart for the onshore market, okay, the 9 am to 3:30 pm onshore market. So you will see price gaps here. See what has happened in the last 3 to 4 days. We were very comfortably placed around this tight range. I have already talked about that tight range in my last week's video. Do have a look at it, how it has been very range bound and the volatility had come down. Now that was what had happened in the last week, in early part of this week as well. But then have a look at what happened in the last 3-4 days. We saw a big down gap here. See the big gap here between 88, 30, 35 to 88, almost 70. A big down gap there, and then we saw a bit of a continuation move here. Okay, so it's a good 1 rupee lower than what it was last week, or at least early part of this week. We are around just around 88. It went to 87.68, 87.70 as well. It has come back a bit towards 88 today, the end of the week. But what we saw was a decent gap and a big fall in the dollar INR in the last 4-5 days. Okay, so this is the onshore chart. So what has happened is, in this decline, a lot of these price gaps that were here had got filled up. But remember, these price gaps are still there, but a few price gaps got filled up. But then a big price gap was formed here. What I just mentioned, the range between 88.35 something to around 88.70s. Okay, so that gap remains unfilled as of today. So this is on the onshore chart. Let me come to the offshore chart. Okay, that is the 24-hour dollar INR chart. So you will not see gaps here, but I want to show you some very critical technical indications that we are getting in the dollar INR chart. If you look at this linear regression channel, it is a very clear-cut upward sloping channel, and now what we see here is that the lower support channel is coming somewhere here at the current level of around 87.90 to 88. Okay. Now also remember, we saw a level of around 87.70, 75, 80 in the early part of later part of September. So now dollar INR has come very similar to the low of what we have seen in September. So that is one indication. The other indication is, if you look at this previous peak, the peak that we saw in early February, where dollar INR had touched 87.95. Now currently the price has come very close to that level. Okay, this is what we call as the principle of polarity in technical analysis, where previous resistances become the later levels of support. Okay, so now this region looks like some kind of a support because of this linear regression channel, also because of the previous lows that we saw in September, as well as because of the high of dollar INR that we saw last time at 87.95. Another interesting thing is to look at this green line. Okay, this green line, if you look at it, is a 50-day simple moving average. Okay, historically this green line has been good indicator of support levels, and this yellow line is the 100-day moving average. Okay, this yellow line is the 100-day moving average. So the dollar INR has declined and come in that support region between the 100-day moving average and the 50-day moving average. So what it tries to tell is that it has reached some kind of a support region. Supports do get broken up, that time will only say, but as of now we are at some level of support region. So what is the recommendation for exporters and importers? See, exporters have got a lot of opportunities in the past, very high spot levels. I am sure they would have capitalized. I have shared multiple videos of how to use that kind of level to mitigate risk on your export receivables. For importers, I think levels below 88, somewhere around 87.70 to 87.90, around this 20-30 paisa range, you should try and do some degree of forwards. you have not gotten too many chances in the last 2 to 3 months. So this is the level that you need to start, at least start to hedge your positions. Don't hedge a large amount of positions, but do start hedging. Okay, you can use forwards and you can use some degree of vanilla options as well. Exporters have got their chances. If you are still under hedged, then you can look to do vanilla puts rather than doing forwards at slightly lower spot levels. Okay, but it makes a lot of sense for importers to at least start hedging. The spot has come down. It has not come down substantially, but it did come down by around 1.5 rupees. So that is a good level to at least start hedging your import payables. So that is it from my side. It's the Diwali Eve, and all of you, I would like to wish very happy Diwali and happy hedging.